Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Saturday the 14th, and we had another down week. Obviously, we're in a bear market still. That doesn't change with one day on Friday, although Friday was a pretty powerful uptrend. So we're going to take a look at the charts and see if this is the beginning of something bigger or just destined to be another bounce within this major downtrend. You can see that in most of these markets, we still have declining 5, 10, 20, and 50-day moving averages. So let's look at the chart here, starting with the S&P 500. For the last several weeks, we've been talking about the fact that it looked like the S&P was magnetized to the volume-weighted average price from the COVID low. When we anchor that volume-weighted average price down there, it came pretty much right to Thursday's low. And as I always say, it's a level of interest, not necessarily a place to do business. What I mean by that is that, I don't stick bids in there just hoping that it becomes a low. So you might look at it and say, well, it would have been perfect. You could have bought the bottom there, and that's absolutely true. But are the risks worth it? That's up to you to decide with your own individual account and your money. The way I approached it, I had outlined on Twitter on Friday morning, was in a strategy that I came up with and wrote about in 2008 that I called chase the gap or wait for the VWAP. And what I mean by that, looking at this 1 minute chart, is do you want to just buy that gap blindly and hope that it continues to hold? Or do you wait for a little bit of an undercut of it, and then as the buyers regain control, that's the time to get involved right here? And that was this point. That's exactly where I had purchased, and the idea was that we were likely to finish near the end of the close at the end of the day, and a stop would go under here. So as always, risk management is job number one. Now you might look at that and say, well, Brian, that is clearly against the declining, well, let's look at the 15-minute time frame, the declining 5-day moving average, the declining 20-day moving average here, the blue, the declining 50-day moving average. So why would you buy here? Because it's not a one-dimensional approach to the market, not one singular time frame. If this is the bottom, we'll know well after the fact. If you're trying to position for the bottom, what you want to do is do that on the shorter term time frames and look at what the evidence might suggest. On the negative side, we're still in a downtrend. We had lighter volume on this bounce on Friday. You can see that that was the lowest volume actually of the week. So we have to look at what are the pros and cons. The declining 5-day moving average, but we're here, we've got the week to date volume weighted average price we closed above and below the volume weighted average price from the high that it's made this month. So if you're looking for the bottom, you might purchase, as I did over in here, take some off. I sold some. I'm holding a very small long piece. And if it was the bottom, it won't bother me at all if it just rallies from here nonstop. Instead, what we want to see is a pattern of higher highs and higher lows. Maybe on Monday we start to do something like this and even have a slight shakeout below the 5-day moving average. That 5-day moving average starts to flatten out. We get above this volume weighted average price, and then we can start to look at larger term time frames, longer time frames such as the 30-minute time frame, and say, where does it have the potential to go here? If it runs up to this level, is it going to find resistance? And if it does, will it make a higher low? And then we can raise our stop under there. So it's all about not trying to say, hey, that's it, I think I found the bottom, I'm going to set my stop below the low right here. Instead, managing the risk. I think it's probably not the ultimate bottom, but as always, the market doesn't care what I think. What we're looking for is to make money, not to make projections and sound smart, but to make money. So looking at it, perhaps we continue to bounce up towards this prior level and that 20-day moving average. We can take a look at the volume weighted average price off the last peak, and you can see that kind of brings it into this area as well. So overall, it looks like we're due for further bounce. What would concern me is if we were to get back below Friday's open. I think if it were to do that, then we probably see a retest of the lows. For the NASDAQ, it's kind of the similar situation. We're up against the volume weighted average price from the high that it made this month on the daily time frame. We came close to the 2019 anchored volume weighted average price, all the way down from that low, and a 50% retracement. So, these are the things I talk about every single day in Alpha Trends. I don't talk about my subscription product much, but right now I do have a special that I'm running through the end of this month, and typically it's an annual subscription of $999. That gets you a midday video where I update the markets each and every market day. This Friday video is done every single day, Monday through Friday. And then I have a stock trading idea where I outline the logic for and the trade ideas. We also have a webinar every other week for subscribers where you get all of your questions answered. And when you take this bundle, which is just $799, it includes the full subscription, but it also has the introductory course, which is typically $99, the advanced course, which is about 13 hours of material for $499, included in the $799, 2 extra webinars, and 30 minutes one-on-one. So please go to alphatrends.net to take a look at that. And I appreciate all of you for signing up that are interested. If not, just continue to watch these videos each Friday, and I'll continue to provide them in this information. Russell 2000 came down right where it was supposed to find support. Now again, here's something that we look at and say resistance tends to act as support. In this case, it looked like there were enough people who believed that stopped selling their shares, and some people started to buy that it in fact did become support, at least in the near term. As we know, that's also the 50% retracement of the COVID low to the this year's high, and we are above the 5-day moving average, which is declining here as well. On Monday, that 5-day moving average will get rid of this data, so that means the 5-day moving average, if we do this, the 5-day moving average will flatten out and we'll start to make a higher low. And as always, it will look like something like this. And that, you could say, is a head and shoulders bottom. What an inverted head and shoulders bottom is simply a pattern of where we previously had lower highs and lower lows, and then we see a higher low and a higher high. So that's why you see so many inverted head and shoulders patterns when the market reverses. Now, if we're to see a continuation higher, again, it's a bounce within a downtrend. We're in a severe downtrend. It might end up being the ultimate low. We need to let the market prove itself. We're not here to sound smart and say, hey, that was the bottom, go all in, because we still have all the same problems in the economy and globally, in terms of the Fed and that. So we have to take it one step at a time, and that's why my chosen time frame is the swing trade time frame. Semiconductors came down to the volume weighted average price from the peak prior to COVID, and they are starting to bounce as well, also on lighter volume. So that's kind of a little bit of a point off for the bounce. We're at the declining 20-day moving average. The volume weighted average price off of this month's peak we're above, so that's a positive because the semiconductors tend to lead the NASDAQ. And now that they're above that level, if they can hold above 225-ish next week, then we can start to build for a bounce continuation. As I've pointed out numerous times, this year we had, I believe this was a 7% rally, an 11% rally, and a 6% rally. We've had some really big bounces, but we're also down, just under 20% in the S&P 500. So, the sum of the declines is still greater than the sum of the rallies, hence the downtrend. The biotechs, we've been kind of picking on these guys as the role model for this downtrend because they've been a perfect example all the way down. People get excited about these little bounces, but when when we anchor a volume weighted average price to that low and then the prices get back below it, well, the sellers are in control, and then the market does what it's supposed to do, which is to continue lower. Looking to a 15-minute time frame, we're still severely broken in here. This prior band of support might become resistance, so be aware of that if you're bottom fishing in the biotechs. Maybe it does something like this and continues higher. But again, we're in a very risky market environment. And when we look at, again, the volume weighted average price anchored to the COVID low in the S&P 500, we came down to that. It's not just the S&P 500. Look at Bitcoin, the volume weighted average price from the COVID low. We came down and tagged that almost perfectly this week after losing this volume weighted average price. When we look at it on a shorter term time frame, such as the hourly chart, there's that green volume weighted average price from the COVID low. And what I did here, this is a 2-hour time frame. We had that flush out lower, so I anchor a VWAP there, and look at where the buyers seem to be stepping in right now. We can also look at this and say, where do the buyers regain control? So if it gets back above here, and we could start to begin to nibble in here for a bounce with a stop underneath this low. So it's all about how the time frames come together, and form a picture of who's buying, who's in control, the buyers or sellers. And when we continue to have mixed messages like the way we do right now, it's a swing trading environment, and that's what I specialize in at Alpha Trend. So I invite you to come take a look and take advantage of this offer, because it'll only be here for the next 2 weeks and then it's gone. So have a good weekend, and thanks for tuning in.